Well, this down payment assistance thing is a big thing, and you've got a lot of programs. I mean, the North Carolina housing finance, that's a big thing. They just changed they increased it best, for the benefit. And the home ready and all that stuff, home possible, home impossible, all that stuff.
Hopefully home possible.
But the one that really intrigued me is this FHA. Didn't they just make a change recently?
Yeah, FHA just made a change. So the FHA program is what's the word I'm looking for?
Ask Delaney. She knows everything.
I don't know.
Ask ChatGPT.
It is it's a staple product for individuals who might have a lot of debt or have a lower credit score. And so a lot of people like to avoid FHA. It gets a bad rap because of the mortgage insurance. There's an upfront funding fee, and then you pay monthly for the whole life of the loan unless you put a certain amount down. And if you're interested in FHA, you can call me. We'll talk about how to get around that.
A lot of moving parts.
A lot of moving parts. But they dropped their mortgage insurance premium by a lot. And it went, this might not make sense to a lot of people, but from 85 basis points to 55 basis points. All that means for you is savings, a lot of savings. And it's helped a lot of people, especially people who are interested in FHA because they have a lot of debt. It has helped them qualify for loans that they wouldn't have previously qualified for.
Am I right that the key is that there are a lot of programs? You need somebody that understands them all. You find out what their income is, where they want to buy, because the area medium income has to do with where they're going to purchase, right?
Absolutely, it does. And I think you hit it on the head. There are so many programs, hundreds of programs that I could take up all of your videos for the rest of your life.
You can't do that.
On the videos.
I won't allow you. There's no fun. But what I'll say is, if in fact, it's just really almost kind of like a doctor. I mean, hey, what are your symptoms? What do you need? What do you have?
What can we do for you?
And we don't want to contraindicate with any other medicines.
Right.
We want to make sure we don't kill you.
That's right. And we don't want to do that.
I mean, you haven't killed anybody, have you?
I have not. Never.
Okay, good. So the key on first-time home buyers, now there's all kind of stuff depending on a lot of different factors. So we're going to give her a number here in a few minutes at the end of the CHATcast. I hope you're enjoying it. You know what to do. Subscribe, like, share, all the stuff the kids do. And we appreciate it. You're one of those kids, right? Because are you a millennial or a Gen Z?
Well, I just had my 29th birthday for the second time. So
I don't know whether millennial picks up in Gen Z, but I don't care.
I think I'm the tail end of millennial, I'm pretty sure.
Whatever. You're a person, you're an adult. So first-time home buyers is one thing, but we're getting a lot of people, tell me if I'm wrong, that are your age, that are making good money, professionals here in town.
Right.
They work at the big banks, they're IT, whatever, entrepreneurs. And maybe they've never bought anything. They get tired of paying $2,000 a month. How much is rent these days?
Just probably about 2 to 3, if you're in a multi-bedroom.
So I mean, for $2 to $3 grand, couldn't somebody like that?
Absolutely. I mean, it's definitely, if you're paying $2 to $3 grand a month and you can easily afford that, you should absolutely look at investing in a house. Your house it's not really just the place where you live. It is an asset. You accumulate equity in it every month. Every time you send that mortgage payment in, it goes towards the equity of your home. That's your asset that you are building equity in. You don't get that with rental properties.
Well, you're building the equity for the landlord.
That's right.
But not for you.
Not for you, or you're paying for their lunch. One or the other.
So really, if you're responsible, you pay your bills on time, and you think maybe, hey, I don't want to get into debt. But getting into debt to buy a house is different than, buying a Maserati.
It's good debt.
A depreciating asset. Basically, typically, I mean, pre-bust, I used to sell it as, hey, you're probably going to 6% interest, 6% appreciation per year. It don't always work out that way. But the point is, you got somewhere to live, and if you start really hitting that principle early on, I mean, I love that idea that, hey, I got the mortgage, but even $50 extra a month.
Oh, it's huge. It's huge. And you can talk to a lender about what that does for you. But you also made a really great point. I looked it up this morning because I wanted to bring it up on this video. Charlotte has 100 people moving to the city every day. And I'm sure we have some people moving out, but it's probably not 100. We have a very desirable area here, and it is growing rapidly. And one of the things, I'm so glad you touched on this, I hear a lot from clients that they have anxiety or heartburn over the interest rate. And oh my gosh, it's so high now, and it's really not.
Talk to an old guy.
Talk to an old guy.
Don't point at me when you say old guy.
But
I can do it, but you can't. 10%, 12%, 14% interest. Crazy.
Ask anybody who...
When it goes from 3% to 6%, not such a big deal.
It's not such a big deal. And if you ask anybody, so the mortgage rates started to increase the back half of 2022. If you ask anybody who decided in late 2022 that they were going to wait for the rate market to cool down, ask them if they feel good about that conversation, that decision, because if they don't.
Yeah, don't chase the rate, don't chase the market. If you need a house, and who doesn't, go ahead and buy a house. Of course, I'm in the real estate business. We'll help you buy. We get paid when you close, and the jingle of the keys. And she's in the mortgage business. She doesn't get paid till then. We're both motivated to help you with that, but we believe in home ownership. Again, people build wealth through real estate. And so we're going to talk about that. In fact, we're coming up, we're going to talk about if they should refinance or when they should, if they should. And tell us, should we read that poem again?
Yeah, let's read it.
Let me read the third grade version.
Read it at the end.
Let me read the third grade. No, let me read I don't want to skip. I want to stick around for the end of the podcast. Hey kids, this video is made by someone named Delaney Besecker, NMLS number 2130746. Don't tune out or send you to bed early. She wants you to share information. She wants to share information with you to help you learn. But remember, what she says is just her opinion.
That's right.
Is that the bank kind of leaving you out there?
When you put it that way, it kind of makes me feel like that.
And it might not be the same as her company, called FBC Mortgage LLC, NMLS 152859. Thinks they're a company that gives out loans for houses, but they have rules and conditions that you need to meet, children. These rules might change sometimes, and they may not offer all their products in all states or for all amounts. So this video is not a promise that they'll give you a loan, but it's just for learning purposes.
I'm glad we emphasized that.
Third grade level. I like that. Well, we're coming up, guys, talking about the refinance. So that's in the next one.